Hey folks, sorry about being late. I'll tell you all about it when we get live here in just a couple minutes.
Fed president says Jay Powell and company have only two options here, and he says he thinks one is looking increasingly likely. Joining us now is Dennis Lockhart, former president at the Atlanta Fed. Mr. Lockhart, welcome. We're so glad you could be with us today. What is the likelihood that you see as the most probable right now?
Well, I think the 25 basis point move is most probable. I think the markets pretty much have that right. But I actually think this is a very close call, and for the committee, it'll be a judgment call. And very importantly, Tyler, we, the public, don't have access to all the information that the committee is poring over yesterday and today to make their decision. And that information, of course, pertains to their assessment of the vulnerability of the banking system, and whether this is going to be something that...
Yeah, I got Lockhart. I got a couple more things again. There's a little interview going on here from a former Fed. Listen to this while I'm getting final setup here.
I think the decision revolves around your answer to that question.
Take us inside the room or rooms where these presentations and discussions are taking place. Who are the Fed voters on the Open Market Committee hearing from? What is the nature of the discussion? How spirited, or not disagreeable, but how contentious can they get? Give me some color of what it's really like to be there.
Well, I guess my experience is a little bit dated, but in my experience over 10 years, these are pretty formal meetings. They are highly structured and they follow the same pattern each meeting. Each person at the table, whether a voter in the case of the Reserve Bank presidents, or just a participant, not a voter in this cycle, all 19 of them have some time to speak on both the state of the economy and what the policy decision should be, as well as what some of the communications should be around the policy decision. And so you have these go-arounds, and each person speaks. But in my experience, there's not a lot of back and forth debate. There's not a lot of interrupting other people. There's not a lot of spirited activity. It's a fairly formal hearing of what everyone thinks.
So in that case, let's say I'm up there and I kind of know, because I watch CNBC and whatever, I know that everyone's expecting 25, and I kind of listen to my fellow colleagues. I think they're all going to go 25, but it sounds like it's not that explicit. If I wanted to stand up and say, guys, I think we should pause, I think we should cut, would I have an opportunity to make that case, or would people just nod politely and move on?
Oh, yes, you'd have the opportunity to make that case in your particular time of speaking, but that's a relatively short period of time, a few minutes. There is some discussion that goes on, but I just don't want to give the impression that this is a free-for-all in terms of debate back and forth. Often the chair, and I think Jay Powell no doubt plays this role strongly, tries to summarize what he has heard, in this case he, and then sort of lead the committee to the consensus that he believes has come out from the discussion, and make some final proposals about how things should be handled, and then there's a vote. The vote at the end is, in most cases, in many respects, somewhat perfunctory. It's not a big dramatic moment.
Yeah, you might have one dissent, two dissents, right? And rarely more than that.
Rarely more than two. You know, I was a member of the committee or participant in the committee,
Right.
where we didn't have a full contingent of governors, so there were only 10 voters in those cases. But generally speaking, the chairs they're comfortable with up to two dissents. You know, beyond two becomes a little bit dicey because it projects to the public that the committee is really quite divided.
Yeah. Well, let's pause there, Mr. Lockhart. We do have the pleasure of your company after the top of the hour, after the decision. So we'll welcome you back then, and we thank you for your time right now. We will be right back after this.
Less than 10 minutes out from one of the most consequential decisions in some time. A very special Fed edition of Power Lunch is next.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius. This is more than just a building. It's billion-dollar views, perfectly located, an inspiration, and enough space to start an empire. LoopNet, the most popular place to find
All right, we're going to try this again, folks. All right, here we go. Just a test, yeah. So what's happened, and I've tried to tell you 3 times because every setting, I'm sorry about this. Welcome to the Kendall Report, and we're finally getting going. Unfortunately, I walked in here to a Windows update that absolutely screwed up every setting on all of my software that I use to broadcast with. Everything was screwed up. So I've been spending almost 40 minutes now trying to get the system up and running and getting all my settings back. It has been a nightmare. So my head, unfortunately, isn't even in the game yet. So we'll just have to listen to Paul and get into it. Normally, I've already been in the flow of what's going on. I apologize. This is all because of Microsoft. But every setting, I just found one last setting that I thought was working. It wasn't. Obviously, I'm live now. So thanks again, everyone, for coming. Sorry for all the disruption. Let's get into what's going on here. And it's really nice because when I was trying to put my trying to get CNBC to work, it wouldn't work right either. So I'm going to just go off screen for a minute here, and then I'll be back and I'll get this up. We only have about 2.5 minutes to go. So hang on, spare with me. right, I'm back. Sorry about this. This is very frustrating. I had big plans. So tell you a little bit about what's going on. After Paul comes on, I'm actually going to bring on a co-host for a little bit. I'm going to bring on Dr. Jim Baker. He and I are going to talk about what's going on with the Fed and some of the conversations that we've been having over the last couple of weeks as this crazy markets have been unfolding. So anyway, we have a delay also in this. I'm using Google TV, and they won't let me display the visual anymore. They used to, but they blocked it. So you pay for something, but you can't use it anywhere you want. So anyway, it's going to go. But yeah, so Jim and I have a discussion. The plan is for the day is I'll talk a little bit. We'll see what the Fed reaction is going to be and all that. And in fact, I'm going to change the screens that I'm on right now. I just want to get over to a live screen, and I'm going to change my view here on the page. And so we'll keep this going, and I'll keep an eyeball on the CNBC. So expectations, as I've been talking about, is really for the Fed to do 0.25%. They're going to keep the inflation talk. They're going to mention the situation with all the SVB and all the banks and Signature and all that. They're going to, I think they'll generalize a lot of that and just say, hey, everything's okay, kids. Don't worry about a thing. We got this. And that's pretty much it. We're already spiking here, folks. We're up 14 handles going vertical. Hang on, here we go.
We're 75 to 5%. It is the 9th hike in a row since the Fed began hiking in May 2022. The Fed providing some guidance saying additional policy firming may be appropriate. And that's perhaps a bit of a downgrade from what they said last time, where they said ongoing increases in the policy rate may be appropriate. Now they're saying additional firming. We'll have to talk what that means. Now, they said recent developments, which seems like a euphemism perhaps for the recent turmoil in the banking market. They said recent developments are likely to result in tighter credit conditions for households and businesses. Those tighter credit conditions will weigh on economic activity, hiring, and inflation. The extent of these effects, however, is uncertain. Now, they left unchanged their year-end projection for the funds rate at 5.1%.
Echo should be gone.
Which suggests they believe they'll be hiking at least one more quarter point and then be done. They raised next year's funds rate projection to 4.3%, which you'll notice is below the projection for the year end. So there are some cuts built in by the Fed next year, but a little bit less than there had been before. They forecast a bit more inflation this year at 3.6 versus 3.5 for the core PCE. They said inflation remains elevated. Remember last time they said it had eased somewhat. That was gone from this particular statement. They said the U.S. banking system remains sound and resilient. On the economy, modest growth in spending and production, they've noted. Job gains have picked up and running at a robust pace. Guys, the one thing I'll notice from this thing is first the change in language for some additional firming may be appropriate. The other thing is almost no connection at all from their comments about the impact of tighter credit to the effect on the economy with policy, except for that little squishy language about what happens next. Kelly?
All right, Steve, thank you. Stick around. We have the markets shooting higher.
Let's do this. I did a quick scalp off of that. I should have stayed with it. Somebody was commenting, and I've taught this over and over in a live room. I've talked about it. That initial reaction, you can fade it. I hate that I was so I guess all the issues that have gone on this morning. Just missed a nice little scalp, but you can see that there was a decent scalp there again. I managed to catch a little bit of it right there. So it's kind of interesting. A couple of things we can talk about here. Fed did what they expected, blah, 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 right? So we nothing new there. And so I want to talk about something else here, and I just want you to see something. Let me go over to let me go over here, and I want to put up. I'm actually going to put up a 1 minute graph here on the S&P. Because one of the things I want you to see this actually goes to a conversation that that Dr. Baker and I had yesterday. We were talking. I was talking about when we get these spikes in volatility. This is like having that. I mentioned this last night. If you watched last night's video, it's like having this perfectly, this pond is like glass, and then you throw a big rock in the middle, and it puts these ripples. And what happens is it takes a while for those to normalize again. And what we're going to see here real time is that there'll be some normalization here. There's some crazy numbers coming out of this volatility. And what we see here, you see three dots up here right now. There's three high targets, 40, 58, 68, 74. And typically what happens here, we see everything will start to normalize. It takes somewhere about 6 to 8 bars or so to do this. And what the result of all of this is a normalization after this shock wave hits the markets. This happens on every time series that you have that you will ever look at. And this is, so what we're already seeing is the market grid starting to collapse in. It's starting to normalize, and there still looks like there's some upside in this thing for a little bit. The algos are pretty volatile here, but it looks like there's a printed upside yet. We just hit the fib target 140.58. That's a new high in this run. Next target would be up here at 40.67. So, but this volatility is going to start. The charts are going to normalize, and this is the best one. I tell everybody, if you're trading and being involved in the markets, use a 1 minute chart. You can figure out all your techniques, because every minute is like, if you're trading daily, it's like a new bar that you can make analysis. You can learn very quickly. But I want to hang out with this and just watch market action and talk about that as well. And talk about some of the things that I mentioned in last night's video. I'm sure some things that Jim and I will delve into here in just shortly. The way this is going to set up, at about 25 after, I'm going to hook up with Jim, get him all set up. He's just going to be via phone. I'm not going to be able to get him on video. We have to go. We're working towards fib target 2 here, folks. Like I said, the algos are suggesting a little more upside here. Fib target 2, 68, last trade 60, 66. So definitely some big upside here. And, as I've been saying, these markets are normalizing. Even with the SPV situation, the banking system is normalized. Somebody, I got somebody on the channel last night posted a whole bunch of links telling me what I should be doing. And they're talking about outflows and banks and stuff like that. None of that really means anything. When I say the banks are stabilized based on price, markets are stabilizing, there's always going to be inflows and outflows. And this is part of the ripple effect that I'm talking about until things normalize across the board. And the people that are moving money around are bigger money folks, not us little folks, okay? The VCs, all that stuff. So we came, let's see what we printed here. We printed, we get up here. Yeah, we got the 66 was a high print, 68 was fib target 2. Now you're seeing what I was talking about here. And let me see if this will zoom me in at the right place here. Yeah, perfect. I'll just pull this over so you can see it. This is exactly what I'm talking about here. Is you see that the spread between the high-low on the market grid got really big. We had the Fibonacci targets. Now what we're seeing from the algos is that we should start to stabilize here. We're coming back in toward the market grid. So it went from this huge gap, and now it's starting to normalize again. So the point of just bringing this up, this is really typical action. I've talked, there's really a quick fade. It's 1 to 2 minutes off of the spike of the initial reaction. There was one there. I grabbed it. I grabbed a piece of it. I was trying to get CNBC off and all that crud. There's nothing that these hosts and these people, what we'll do is, this is the plan. So I'll bring Jim up. We'll take a 5-minute break while I'm getting him up. I'll put on a screen that y'all can watch and just have that up so you can be watching the markets trade. And then I'll get Jim up and we'll come up and we'll listen to Paul's opening speech, and then we'll talk. We'll talk banks. We'll talk a whole lot of stuff. So you're telling me there's an echo right now? Wow. Folks, I am so sorry. I run this show every night. Everything's set up. This Microsoft update has screwed up everything. I don't know why it's echoing. I can't stop this stream, so bear with me. I'm going to change screens and just see if this works. How about now? Is this better? Let me know. Gosh, I am so sorry. Okay, so it must be that screen setup I was on. Everything, like I said, I had to go through every screen setup and try to change everything. Obviously, there's something still wrong. I won't use that screen again. So it looks like, okay, man, this is so frustrating. I try to be as professional as I can on this show, and I have everything set up and to have all this disruption. Thank you, Microsoft. Oh man. So anyway, we are getting what I was hoping to do is to be able to zoom in on this thing. So let me know this screen is okay, I believe as well. Correct? We're not getting any echo. So I know it's about a 20-second delay. So let me know. Yeah. Yeah. That's very frustrating. Makes me feel very amateur. And I work hard at this job. So, anyway, yeah, so we're starting to see this 1 minute starting to come in now. We got that peaked out. Now we're trading back in. We actually have a fib target 1 on the downside. 43, 35, 30 is the targets. We're trading right on the 21-minute moving average here, and there should be some support here. But the algos are starting to show a little bit of downside. Maybe we get back down to 40, 38 in here. We just got an update here on the screen, so let me move that over a little bit. Well, I have no idea what's causing this echo, folks. I mean, I don't even know what to do right now. I'm so frustrated. Like I said, every setting inside of the software was changed by this Microsoft update. Folks, I am so frustrated right now. I want to scream. Yeah, I thought I had the auto updates off. The problem was because of it was causing errors with TradeStation. My entire environment was stretched. So yeah. Yeah, that's interesting. Some of you are saying echo, some are saying not. This is just disrupting the whole flow of what we're doing here. I'll tell you what I'm going to do. I'm going to put you on break for a minute. I'll put I'll let you watch this chart. We're seeing it come down to the 40, like I was just saying. The August is a suggestion we're coming back in even more. Here's Fib target 2 on the downside about to be hit. I'm telling you, folks, echo or no echo, if you don't have these indicators on your screen, you're nuts. KendallReport.com/indicators. Sorry for the echo. Sorry for all this stuff. Let me just put on hold because somewhere there's a duplicate stream coming into this, and I'm trying to figure that out. So, but I think what you're telling me, let's try this screen. How about now? Let me know if there's an echo here. Because if I have to, I'll hang out on this thing. Okay. Let me know if it's better on the screen. Yeah, so I just see some comments. Thank you, everybody, for putting that out. Fed funds futures. Listen, Fed funds futures are like a flipping the coin. They're okay. That's market expectations. That's okay. Most of these metrics don't tell a lot. But anyway, I just want to go back to the screen here. Is there I have a Mac and I would throw it away. Listen, you guys listen to me every day. This is, Macintosh is just as bad. iOS and all the updates are just as bad. This is really, I'm going to put you on hold. I'm just going to put some sound here. I'm going to fix this. Okay, folks, tell me, do we have a echo or no echo? And we're just going to go forward the best I can do. I'm really disturbed by all this. So let me know if it's there. I want you to notice what did happen on the screen while I was gone. Man. This is so frustrating. I'd get a Mac if it wasn't worse. Echo. Yeah, I've actually checked every setting and it looks fine. I don't know what to do here. Okay, so here we go, echoing all, folks. Man, this is very disturbing. Yeah, isn't that funny that I went to that extra video? Okay. All right, so Paul's going to be on in a few minutes. I am not even going to attempt to put that on. Bear with me one second. Yeah, I think what's happening is somehow my camera that I have is getting sound. That's where it's coming from. Let me know if you can hear me talk at all when I do this, okay? And then we're going to move on. All right, so that wasn't it. Okay, last time. All right, we're going to put up with the echo. I will write off today as probably one of the most frustrating days I've had on this channel ever that this is happening. All right, so let's just go forward here, folks. Yeah, so Paul will be up here in a minute. I was talking to when we were on break there for a few minutes. I appreciate somebody going the music more annoying than the echo. So yeah, listen, I've changed nothing in the studio except for Microsoft Update, and I'm not sure what's going on. It's going to be, I'm going to have to deal with this afterwards. I was literally, this all happened as I was about to come live, so I had no way to deal with this ahead of time. Yeah, so anyway, we'll just go forward here and talk about what's going on in the world. Obviously, the markets have stabilized here. 44 is interesting number. We're right back at the 40-50. How many times have I discussed the whole idea and the concept that the markets are locked in this range. We printed down to the 38.50 on the SPV and all the banking noise that was out there. You know, we witnessed let's say 250-year-old bank going out of business and in Europe, and just the world continues to get reconstructed. I guess it's time to build some new banks and come up with some new strategies. I think it was interesting last night, and I'll just go on for a minute. Paul should be up here in just a couple of minutes. And as soon as he comes up, I'll play the audio. And yeah, I know it's echoing. Yeah, so we're just having to deal with it. There's an issue with the software. Who knows? Maybe there's, because of this Microsoft update, maybe the Streamlabs, I use Streamlabs, it's an OBS, and it's just, everything, nothing's changed except for Microsoft. It disrupted all my settings. So there's some setting here that's causing this echo. There's another mic that's getting picked up, and the only other mic in the room is my camera. So all right, so we're going forward. So when Paul comes up, I'll try to put that up and see if we can get that up there. We'll talk about it. Still planning on bringing Jim up. I have a feeling I think we'll lose a lot of folks, and I appreciate 345 people hanging around putting up with this echo. So I really apologize. Yeah, I just can't. I have to go offline and kill this stream, and I just didn't have enough time to troubleshoot it, having no idea that I got the audio settings right, and then I find out there's some duplicate, there's something going on here, and I'm sure it's a simple setting. Take off something and be fine. I want you to look at the chart that we're looking at here in 1 minute. As Paul's starting to come up, we're getting, the algos are starting to turn up again. You look at the PPM2, I'll put a cursor on this thing here. It looks like it's going to accelerate up. We have new Fibonacci targets on the upside right now, 40.55, 40.61, 40.65, just continuing to move on. If we can break out, it looks like in the next 2 minutes, which is interesting, is right when Paul's going to start talking, is when we should start to get this going. And I know I have a bit of so we're going to test something. Let me know. Somebody like the echo. Okay, so let me know if you can hear this.
Race ahead, say the Fed is done, Fed is our friend again, and they also wouldn't want the reaction that said, uh-oh, policy mistake, they're over-tightening, they're, kind of insufficient.
Yeah, let me know if you could hear that, and if you can, then we'll use that audio to go forward with. Yeah. All right. How about now? Can we hear this? This guy always annoys me.
To the forecast for 2024 and beyond, it looks like oh, here comes Jay Powell. Mike, we'll defer to him right now. Thanks.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par.
Notice the futures rallying into the fib targets.
Our long-standing discount window is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as well.
Algo's trying to turn down here.
Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation
Getting another
is
volatility
3.3%
spike here
for this year,
on the downside.
2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual
Does that sound like a
effects of
pivot?
tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay, folks, we're giving this a try. I've been working on audio settings as I was going through. Let me know if the echo is back or gone here. And if there's an echo, we'll just go ahead with it. Okay. Wow, I figured it out, folks. I'm glad that while Paul was talking, I was sort of listening. So this is a good thing. Okay. Listen, I heard him say something about maybe a pause. I don't know if you folks heard that, but I'm going to try one more screen here, just see if I can get, yeah, okay. I am so sorry, folks, man. Thank you for your patience. I love you guys back big time. So let me just find one more screen, and I think I can fix it, and then I know exactly what's going on. There was a duplicate that got done on this update, so I'm going to go over to this view, and I'm just guessing that this is fine now, correct? Just let me know, and then we'll be able to rock and roll. I'll be able to get Jim on, and we'll be able to do all the good stuff. So appreciate it. Yeah, what happened is not only did it change all of it, it duplicated some. Yeah, I figured it out. I always tell people I'm smarter than I look. So just make sure that happens. Yeah. So I know exactly what's going on now. What a bizarre situation. Okay. Anyway, so yeah, I'll just talk for a minute, and I will. I've got a screen that I'm gonna try here real quick that I'm gonna use when Jim comes up, because I'm gonna call Jim, bring him up, and we'll have a conversation about this. Look at this. Look at this market rally. I think everybody heard what I heard, right? I heard that we may not have to do it. We can slow down. He kind of snuck it in there, really interesting, and the markets are picking up on that. And you know, we're probably close to that rate. I was talking about for a while the terminal rate is probably likely to be around 5.25, 5.5. It may not be done, but it looks like I heard it. I think the market participants heard it. So, you know, all of a sudden, some of these numbers that I've been talking about, maybe you're in play. They always were. It's just a matter of getting the flow to go there. So once again, it feels better knowing that I don't have an echo on this page here. And let's just go over. I want to do a quick review. Try to get my whereabouts here again. VIX is plummeting right now. I mean, we're looking at VIX is down 4.72%, just getting hammered. Looking at a couple other things, 10-year 348 down fairly big. So all of a sudden, interest rates are kind of coming back in a little bit. We'll go through some of these things and look at pretty good. So yeah, listen, I've tried to throughout this whole situation, and like I said, so Jim, hopefully you're listening, and I'm seeing the delay on. I have the channel playing, so I just came up. So anyway, I'll get Jim up. I'm going to test one screen here real quick, and just you let me know if how the audio looks, and just let me know if it works fine. Let me know if there's an echo here. If there is, it looks like it's probably fine. If there's no echo on this screen, I will. We'll take a very quick break. I'll let you guys watch the screen, and I'll bring up Dr. Baker here in just a minute, and we'll have a conversation about some of the stuff that we're talking about. So, yeah, just let me know. No echo on this screen, correct? Okay, awesome. Let's go back to this screen. Yeah, everything should be fine now. So let me put you over on. Let's go back to this trading view screen on a 1 minute. I want you folks just to look. It looks like the algos are starting to peak out again. I mean, there's been some great trades in here. These things have been calling these turns perfect. It looks like there's another turn being called here. We've got a pivot right here at the 40, 50, 250 level. We take that out. We'll test this 10 period moving average, probably roll back into 46. We'll see what kind of indications we get, but it looks like we're starting to top out here. And we're really establishing, I'm going to draw in something real quick here, just as a market perspective here. And then we'll get into, I'll call Jim, and we'll get him on board here in just a minute here. Let's take a look here. I'll draw in something here very quickly. But this is we see a lot of this stuff happen all the time, and I talk about this in the nightly videos. But we've got this box trade going again, and we're just working these ranges. And I mean, if you're an active trader, there is some pretty nice money in these swings right here. I mean, we're looking, 10, 12, 15 handle swings here. And this, you can see the indicator is about, it looks like these are all going to turn down here. We're already flat down here. This moving average is flat down here. So we could, they're testing the upper end of this. And this should be the final bar. This minute should be the turnaround bar on this. So we'll take a look at all that. We're trading through RTX now on the 1 minute. So there's still, who knows, this volatility may start to turn up, but it looks like the algos are suggesting at least we should, there's the minute update. They turned down as expected. We should test the 10, but it's rising sharply here. So 1 minute, there's a lot of noise, but I'm pretty impressed with of some of these swings. The swing shouldn't drop much more lower than down into the range of this 21 period. There's a pivot I mentioned here earlier. That's going to be your major support in this pattern. So no major downtrends being signaled, but just a sideways range here right now. All right, so let's do this. I'm going to let me close out this thing. And what I'm going to do right now is I'm going to let you folks watch the screen. I'm going to get Jim on the horn and get set up so that we can do this this call. It should be fun. We're still seeing some little upside prints here. We got the update. We did not get the RTX sell, so we're still got a slight bias, but this 10 period moving average is going to be the key in this pattern here. So all right, folks, just watch for a few minutes. No music, no sound. Talk amongst yourselves, chat on the line, and then I'll have Jim up here in just a minute. All right.
Hear me okay?
Yeah, I hear you fine, Jim. Hey, welcome everyone. Thanks for the silence. I was trying to get Jim on. We have Dr. Jim Baker, the father of asset liability management, and we are all very privileged to have him on today. So, hey, Jim, how's it going?
Great to be on, Bob.
So, everybody, let me know that you're hearing Jim okay.
Hello, everybody. I've just been listening to our leader, Chairman, and also to Bob.
Yeah, so Jim, let's talk about a couple of things that we discussed the other day from the standpoint of, I'm just trying to get a mic so you can hear Jim good here. But we've been talking about a couple of things. I heard something earlier. Now my mic is failing on me. One of those days, to say the least. I heard somebody talking earlier is that by the actions that Fed did with the discount window, a lot of folks are complaining that there's some kind of QE going on. I want your opinion on this. That actually their actions weren't expanding credit, they were just fixing the problem, so there was no real QE element on there. What do you think about that?
I absolutely agree with you. I think that it's a misnomer by people that really don't understand the Fed and monetary policy, but it's clearly there for banks that are losing deposits, and it's there to provide them with money so that their customers can take the money out of their bank and move it to somebody else, whatever they want. And I think it has important implications, though. And it's kind of weird. And I don't think the Fed really thought about this, but maybe they did. With 400 economists on their staff, surely one of them had an inductive leap. But the result of the banks being able to collateralize their loans at the Fed under the new loan program, term loan program, and the collateral is being taken in at par value, even though some of these suckers may be going the speed limit, and by that I mean maybe trading at 55 cents on the dollar, the Fed will loan them $1. Well, that's a heck of a deal. Now, the banks, because of that, because they can borrow the money at the Fed, without question, to meet deposit withdrawals, will not sell their government securities. So that takes some pressure that might have occurred in that fixed income market. That takes that pressure off that market. Those banks will not sell those securities. So they'll lose the deposits and borrow money at the Fed, and that money that they lose, now they're going to lose it to two places. They're going to lose that money by some people that know what the hell they're doing will just directly buy U.S. Treasury securities like they should by opening up a Treasury Direct account, or they'll transfer money to their brokerage account, in which case they better get the government money market account. And if they did that, then their brokerage account, their broker's going to buy some more Treasury securities. So the money, the money that they lend at the window to back up these securities to meet any deposit withdrawals, if the wealthy venture capitalists and the moguls, if the billionaires start running on banks, then the Fed, that money will just end up in Treasury securities and help finance. Now, no one's talking about the debt ceiling and the looming deficit and how many bonds the Fed is going to have to sell. Who in the hell are going to buy those the Treasury securities?
I guess you just solved the problem there, Jim. The guys that are going to buy it is all the billionaires and people moving the treasuries. Maybe that's the game to get them to move over there.
Disintermediation is alive and well. It's a hell of a way to finance the deficit. A hell of a way.
Yeah, absolutely.
The Fed doesn't buy securities. We know the Russians aren't buying any goddamn securities. We know the Chinese aren't buying any. We know Japan is liquidating their securities. And the banks, they're not going to buy any securities. So what I see is M1, Milton Friedman. All of my professors were students of Friedman, so we just called Friedman God. And we walked around with all of his publications, and they were Bibles, like Essays on Positive Economics by Milton Friedman. Anyway, M1, deposits at banks were falling anyway. Deposits at banks now will really fall. And as those deposits fall, credit conditions will tighten. The banks will have less money. Tighten. Not only is it take an example, that New York Community Bank bought Signature Bank up there in New York. And that New York Community Bank, looked at their note case, the loan portfolio at Signature, and they said, we don't want any of those goddamn loans. They didn't take a single commercial real estate loan. $35 billion. They said to the FDIC, you all keep those suckers.
Hey, Jim, real quick, I hate to be like our buddy Mario, but markets are breaking down pretty sharp here. And the algos had
just when he was speaking, I was shorting the NAS. He's basically saying conditions are going to get tighter. Credit availability is the one thing that has kept this economy going.
Yeah, let me update this market. This is fairly important here. As what we're looking at here, folks, we did get algos. We're turning south. They're turning pretty south. We got another Fibonacci target down here at a quarter of 40.38. We just went through. We're looking at the potential of getting down here. Let me just get the cursor in the right place here. We're printing 36, so 40.38 was fib target 1, and but you notice that PPM1 starting to turn up here, so we're probably going to stabilize right at this level here. So once again, we're still working that box formation that I showed you a little bit ago. Hey Jim, what I'd like to switch a little bit here in conversation that we had yesterday and talk a little bit. This is relevant to where you were going. Is talking about the FDIC, and of course, you triggered me yesterday into resolution trust mentality, and I couldn't get out of it the rest of the day. I had to eat an entire pint of ice cream after that. I listened to that. So, but hear me out for real quick, because I want to set you up for this, because one of the things, folks, that we were discussing yesterday is that the FDIC and the resolution trust, if back in 1989 when they did that deal, it was mandated, I guess, created by Congress, and it was basically a place to take there was 600 and some odd S&Ls that failed back in those days, and it was pretty ugly. And so what the issue was, and this is what I wanted to say to you, Jim, I meant to say it yesterday, is we were talking about the FDIC. Well, the Treasury funded the resolution trust, and we talked about the Treasury has $0. Janet Yellen talks big, but she has no money. But here's the thing: when you have a legislature and you can change the rules, you can make anything happen. So I don't put anything beyond them. And as we're talking, folks, we just printed down to the 25 number, which was fib target 2. I'm going to change the scale. I've got this up so that folks can watch the markets while we're while we're talking here, Jim. So we just went to fib target 2, just traded down to the extremes. It looks like this bar should be the turnaround based on PPM 1. Look for a little bounce back at least to fib target 1 back toward the 36.48. It's already happening as I'm speaking. So why don't you go into that a little bit, Jim, there on what do you think about my idea? You just change the rules, you can make anything happen with the FDIC or new trust.
Swiss National Bank did that.
Yeah.
You know, instead of wiping out the bondholders totally, or instead of wiping out all the equity holders and giving the remains to the bondholders, they didn't wipe it. They didn't the reverse. They made some of the bondholders whole. Crazy, but they can change anything they want. It's Washington, and you're right. That by the way, the FDIC is managing the old Resolution Trust, and I looked at the note. They still have some loans in that on the books. They still have some loans, and they still have some lawsuits they're pursuing, and they still have some judgments they're trying to collect on. Still going, but it was all the S&Ls that were in there.
Yeah.
And people got filthy rich buying those assets from Resolution Trust.
Well, I was on a space the other day, and right after SPV happened, and somebody was saying that this is a gold mine of assets that are going to be available at a deep discount, and there are going to be plenty of people to buy this stuff. While everybody's talking about bank crisis and all this stuff, the guys with the bucks are sitting around the fireplace trying to figure out which things they're going to buy.
If you had the money, too bad for the boys at Apollo Group and Carlyle and Blackstone that are having to gate their REITs. God, if they weren't gating, if they actually had money coming into those suckers, they could buy those $35 billion in loans that New York Community Bank refused to take, because now they're on the books of the FDIC. Now, the FDIC is going to want to get rid of those $35 billion in commercial real estate loans, primarily, I think, in New York City or New York, and a 17.5 or 19.5 billion in multifamily loans in rent-controlled buildings in New York, and they're out there now that no one wanted. I mean, just imagine, they didn't want them at any price. We don't want that stuff. Now somebody's going to buy that. Somebody's going to buy that. But it's probably not anybody in commercial real estate now that's wondering, gee, this credit, they got to be having a hell of a problem borrowing money. If I were a banker, I wouldn't lend them any money. You want to borrow some money? What do you want to do? I want to buy an office building. What? What are you, crazy? No, I'm going to convert it into condos. Really? Okay. I'm not going to go out of here. Get the hell out of here.
Hey, Jim, another market update, folks. We're still selling off here. We're down to 40.15 now. We traded six.
That puppy when he was speaking.
Yeah. We traded up to 68. We're now printing down to the 14 handle. We printed 1375. We're trying to bounce again. Algos are trying to get some traction, but PPM 2 and 3 are still pretty heavy negative. So there's going to be, maybe we can get back to the 200 minute. We're staying on this 1 minute chart, and it looks like the algos are trying to set up a bounce. I've tried this a couple of times here. We can't seem to get anything, but we did print down below the 40.17 level, which was that fib target. So we just got an update here. It looks like the 10 period moving average is going to come into play here in the next couple of minutes, and maybe we can get some stability and run back up. But This is pretty much working the S2, S1 range I talked about last night on the futures, just to kind of keep in the context. And I'm sure I'll go back and listen to what Powell has to say. I'm sure he's just running at the mouth. And so much for it felt like there was some kind of pivot, but I think Jim is right what he pointed out, both on his text that he put into the chat a little bit ago, that the Fed's telling you that credit conditions are going to really start to tighten up a little bit. Meanwhile, real estate sales last month in existing homes was up 14.5%. And so I'm arguing that he's saying that, but I'm not sure how much tighter they're going to get, especially if he is going to take the foot off the pedal on raising interest rates. It's going to get interesting going forward here.
Bob, the NAS is now off 240 points from its high earlier.
Yeah. It's still in the, yeah, that's fine. To me, it says this stuff is just trading the box range. So
now I'll tell you what, who likes this, who likes what he had to say. The bond market liked it. They've traded, the price of bonds has gone up a little bit, and the yields have gone down. So the whole yield curve has shifted a little bit.
Yeah, I just put them on the screen while you're talking about them. I've got the 2-year up here, so they've rebounded. I've got this is a 1-minute graph on a 2-minute, a 2-year yield, and yeah, they bounced back up into the range. There's a pivot right here at around 4%. So they're bounced.
Everyone's an expert on the discount rate. No one has the depth of knowledge of credit availability. That requires a different level of knowledge. They just don't understand that. But we're about to see that. We're about to see that. Where you go to the bank to borrow money and they just don't have enough to lend you. They're not lending.
Yeah. Just so you know, the 2-year has bounced from 391 yield all the way back to 4, trading 404 again. So they're inverting this thing pretty quickly. Yeah, this stuff is all over the board. The futures are finally starting to bounce. I brought those back up here on the screen. So yeah, we're just looking at a very nice decline. It's interesting because when we were up here in this high range, this is where the algo started to suggest we're going down. We had the fib targets there shortly after and went right into that range, just traded a little bit below there. And like I said, even the yields are starting to reverse a little bit here as we speak. Go ahead.
I want to guys one thing to reinforce your view is that I'm in sync with you. That although I've said all these negative things about credit availability and that, I think it primarily affects those office real estate guys and some of the guys with the bad strip malls and the those areas. I don't see this as destroying the economy. I don't see this as all of a sudden now we're going to have a deep recession. I'm going to go back to the remark you made at your deal last night, and that is, hey, these are just the ripples of the water calming down. This is not a tsunami. This is all working out. This is all working out. And you're right. I think that the residential real estate market, it looks alive and well. I mean, people are buying homes. The people are realizing, like you and I now, that hell, they can afford 6.5%. They can afford 7%. As you told me, you had a 14.5 or 15.5% mortgage. I had an 18.5% mortgage, and my loan was written up by the examiners. I said, Jesus, writing up my loan.
So But was that loan at your bank?
No, it was at a friend's bank. And Jim, they wrote up your loan. I said, how'd they do that to the good doctor, writing up the good doctor's loan? And they wrote it up as a non-conforming loan. I had remodeled a house. It took a year, and we added a total of 3 square feet. And the cost of the remodel was $300,000. And I had borrowed all that money along the way. And the examiner didn't think that was very smart.
That's funny. So
I agreed with the examiner. I said, you know what? You're right. It wasn't very damn smart.
hey, folks. Hey, Jim. I just had an event happen on my screen that is mind-boggling. I just saw, folks. I want you to look at the screen here, and you'll see just in this minute update, we just got Fibonacci targets for the market to rally to 40, 56, 76, 88, like a complete turnaround from this decline we've seen in the last 35 minutes is trying to turn around. The algos are all turned crazy positive. It looks like we should challenge the right here at the 40, 26, 40, 28 level. I don't know. It looks like things are trying to turn. These days are just wild. I could. Let me set something up and real quick, Jim. Sorry to interrupt the flow, but I put a 5-minute chart in here, and we've just been. You can see this. We're still within on a 5-minute. When we change the time series and go up to scale a little bit, that wave that we're talking about, that ripple effect of data. Jim and I got talking about audio regression analysis and stuff yesterday. And this is what happens with data when you get a spike in data. It takes, and I mentioned that earlier, it takes some time for that to normalize, and it takes time. And Jim, this is quoting you from the other day. It's like time fixes everything, right? And in fact, the whole SBV thing, if the billionaires and Thiel and those thugs hadn't taken their money out, you still wouldn't know you wouldn't know that symbol SBV at all, because it was all generated by a coordinated action for whatever reason. Maybe we'll know, maybe we'll never know, but it happened, and that caused that wave and all the estimates. It's interesting. I'm going to go back to the 1 minute. I was fascinated. I saw that pop up. These things are still live, and the algos are suggesting we're coming back at probably there. We just took out that level I just mentioned at 40, 25, 26. We're already there. We're probably heading back to the 200. Algos are getting stronger on ppm 1 and 2. So we'll probably get back up towards a 200, which is back at the 34 level. So just know on a day like today, when we see this kind of volatility on an intraday basis, I mean, we watch this is pretty phenomenal, actually. We saw a move as high, actually, I'm looking now on, it printed 73, 75 high, and we went all the way down to 13 on the downside. So we had a 60 handle run on the downside. Now we're recovering. We probably if you did Fibonacci analysis, you'd probably get back up. The 200 is probably a 0.38 reversal back to the upside. It'll be interesting. But when I saw these Fibonacci projections come out, these come out real time here with the WaveTech indicators. And what happens is when you see that, you start to look for a pattern setup that happens that I talk a lot about. Those of you who've been in the live room know this 1, 2, 3 pattern. This is the one of the potential 1, 2, 3. So we go up to 200, we pull back, set up a right shoulder against the 10 period moving average, and then we set up a pattern that gets us. It's interesting though that this target range that has been generated by the algos. So I see this stuff, and like if you look at all the previous ranges, for the most part, at least fib target 1 or 2 gets hit, and fib target 1 would be about probably a 0.618. I'm guessing at these numbers, so don't. Back to 55 would be a 0.618. That would be fib target 1. So these aren't out of line with the volatility that we're seeing here, especially when you see It's probably a 28, 30-minute decline of 60 handles to see a rebound back 30 off of the lows, maybe 40. And that's what we're seeing there. So sorry to bring that in. Yeah, so somebody's talking First Republic's down, getting hammered. Yeah, listen, I mentioned this real quick, and maybe Jim and I can address this for a few more minutes here. And what we're seeing here is in these banks, as there's just going to be news story after news story, volatility. None of this stuff is an easy fix, but notice we're talking about one, maybe two banks. Pacific West, that thing's already solved. They got a Jim, I don't know if you heard about that, but they got private money to fix that one. And, and I think it was the real estate guys, because those guys do lots of big time multifamily loans, all that stuff. And I think what we're seeing here, folks, just on all these banks and everything, is there's workouts everywhere. And you can pretty much, there may be a lot of banks that have funny looking balance sheets, but you can count the ones that have real problems probably on one hand, two tops. What do you say, Jim?
Yeah, I mean, it's clear that by what Powell said, that there are very few banks that have a problem like Silicon Valley did, and they've controlled. And let me say, I see the comments by Pamela on that. I promise I'm never going to curse again.
Yeah, I was going to tell you, this is a family show. I keep it pretty clean here. There's a lot I could say. Yeah. So what do you think about what I was saying, though, Jim? With all these, I guess you basically answered it as far as I don't see that this contagion story or any of that goes anywhere. Like I said, even going back a couple of weeks ago when SBV happened, I said, you know what, this 2 weeks from now, we want to remember this stuff. And it might last a little longer, but it's already gotten to the point where it's so isolated on a couple of banks, and, the folks that want to focus in on those negatives are going to be, I guess, challenged as they go forward. Now, as I'm talking, I just told you folks we head back to the 200 period moving average. Algos were predicting that. We went right there. Now, this is going to be, there's something on the chart I want to address here. Is on the chart is there's a number right here, 4017 even. You see these red dots. I'm going to expand this chart just a little bit so you can see them a little better. This red dot that come in, this is what in the algos, this is the pivot point. That's going to be a major support, and chances are we don't take that out. And in fact, when we penetrated through that pivot was where this rally we're in right now started. So we're trading back at the 200, and it's a question whether we get to fib target 1 that I talked about a minute ago, 40.56. So we're rallying back pretty hard here from that standpoint. But I just the algos on PPM2 are just getting stronger. So what it's telling us is that these averages are going to turn up. We're already trading right now 41's printing already. So we went right through the 200, and we're probably heading right for that 55 level. So like I was trying to say earlier, when you get into a day like today, I just wish I could have focused on trading today. That would have been amazing. But I was dealing with echoes and bad settings in Microsoft. So that sometimes one of my associates and I talk about how the universe tries to keep you from making money all the time. There always seems to be these little distractions and noise. And I also think that's the case that happens with all of us with the news media, all these stories, and this everybody became a bank expert. And somebody, even on this channel, I mentioned it, I've been on some spaces, and and you got some doctors, MDs, and surgeons talking about the banking system and everything. I'm not saying they're not smart people. They're just out of their league. I don't go in and talk about surgeries and like how to do it. I had a very successful Chinese doctor as a client many years ago, back in the 80s. And he's coming in telling me how to trade one day, something about some trade that we had on. And I told him, hey, Phil, I don't come in your office to tell you how to do knee surgery. Don't come in here and tell me how to do this. If you don't like what I'm doing, you can definitely I wasn't threatening him. I just said, you can definitely go somewhere else and do business. This is how I do it. And if you don't like that, that's okay. But, don't come in here and respect my domain. And that's all. I think there's people like I met Dr. Baker through this YouTube channel. We've gotten to know each other really well, and I feel blessed to have the Doctor of Asset Liability as my friend and an associate that we have in a very unique time and space in this world. We've had a connection that has been really material. And Jim, I will talk to you probably tomorrow sometime about how we're going to handle this, bringing Phil Zweig in, because folks, I'm telling you, we're going to do something that I think is going to be of real significance and educational and understanding both the context of some of the things I talked about historically in the banking system. What I was trying to say is there's nothing new under the sun. Every damn thing that can happen to a bank has happened, and you can go all the way back to 1720. The very first stock that ever traded on the planet was the biggest cause of one of the biggest collapses in Great Britain back in the day. So all I can picture is Johnny Depp and Pirates of the Caribbean. But my point is that everything that we've seen happen is just something that's happened before. So I had called my video last night, the Fed's walking down a familiar path. There is plenty of history here leading up to the formation of the Fed, and as well as all of the actions and things that happen. I've been privy to 5 chairs now. I've been around. Jim's famous line is, I've been around so long, I get to comment on it. I've been because I was there. And one of the things that we are hoping to put together here soon is that we're going to be with Phil Zweig and Jim and myself talking about some of these events. We were all there in 1982 when Penn Square Bank went down, and Jim was part of that community. I was just some 30-year-old trader at the time, and Phil Zweig was the journalist, and we're gonna really bring that in. That stuff. But just know that everything that we have seen, there's nothing new under the sun.
Let me intervene a minute, Bob, and give you a hats off, because you have been one of the few voices out there that is consistently, and correctly thrown cold water on all of these paranoid people that have been saying that the end of the world is near. We're going to be in a deep recession shortly, and that this is just the tip of the iceberg and that sort of thing. And you have consistently said that these are not like that. This is different. This really, truly is different. And so, in that regard, you really, I take my hats off to you, because you've been, and I know you've been attacked for it by being Bob the Bull or something, or
yeah,
totally totally incorrect, those criticisms. And the fact is that with each passing month, with each passing day, everything confirms what you're saying, that the people that are waiting for everything to fall off the cliff. The venture capitalists, the private equity guys, the mega wealthy moguls. They're demanding that the Fed has to cut interest rates 50 basis points because they're destroying the residential real estate market, and that those are all disingenuous remarks by people who've gotten filthy rich off of quantitative easing, and they wouldn't know if the price of food went up or not. They don't buy food. They probably haven't been in a grocery store in years. And they don't sit down and pay their utility bills and that sort of thing. And it seems to me that Chairman Powell, he actually has some empathy. I mean, I honestly believe he has empathy for the people that are struck down.
So real quick, Jim, I got another market update. We're dealing with this volatility here real quick, but I agree with you totally. And thank you for the kind comments on that. I just do my work and tell everybody what my work is, and I live by it for decades. So we're getting a little rebound. We came down to this. It looked like we were trying to break down. We got some new Fibonacci targets to the downside. But this is the pattern that I was talking about. I was drawing some stuff in while Jim was talking, but this is, I got to draw a pattern for you folks. This is like exciting stuff here. Just let me draw this in real quick. And this is the pattern. This is the 1, 2, 3 pattern that comes up, which is potentially projecting on the upside. So I'm going to play a little devil advocate with what I'm saying here, but you see these arrows here. This is what we have is an algorithm that marks out the highs and lows, and it uses those values which to project future events based on a number of factors. And so we can't do it in TradingView, but in TradeStation and in our own software platform, we have some probability maps that tell you things that are going on. And I've shown a lot of this stuff. I am going to be doing some things on the indicator so that you folks can have a further insight in this. But this is like, this is my PhD. I have a PhD in moving averages for whatever that's worth. I've studied them for my entire career, not only the values of them, but the first, second derivatives and determining when they're likely to change. And this pattern is, I tell everybody, if you figure out the 1, 2, 3 pattern, trading's as easy as 1, 2, 3. And what we built and what I built, this actually goes back to 1990. These algos are telling us what's going on. And I got to give a shout out to my guys in Germany, Alexander and Alex, that helped me. And really, Alexander came up with the concept of these algos and predicting what these things were going to do. I was constantly in my head calculating this. It was brilliant. I met him in Zurich last summer in August when I was there, and we just had a great meeting. And anyway, I appreciate both of these guys for helping me. So we just got some new objectives come up here, right here. I'm drawing some arrows on them. And so what's happening is that little pattern I was talking about I'm going to clean up this stuff real quick, folks, because this is exciting stuff for me. But this little pattern here we're looking at, we've got this arrow here. This is what I call 3 marked patterns. This is like, it doesn't get any better than this. But the algos right now are not confirming this pattern, but I want to point it out anyway. What we're looking at is this is that 1, 2, and these patterns up here are slightly different numbers from before, but the fib target 1, 56, 76, 88 on the upside. We're breaking down here. This is what I was going to point out. We're not getting the confirmation. The algos, with the exception of PPM3 are suggesting that we're going to get some potential downside here yet. So it's going to get really interesting. We're 28 minutes away from the close, and just kind of want to focus in on the markets a little bit. So Jim, let's do this just for time, so we can focus in on the close and stuff. Let's have some final comments between you and I. So thankful that you took the time out to come on here today and spend time with me. And we're going to do more things in the future that will be better organized. And I want to get, I actually want to get Professor Dr. Baker in a couple rooms, because I've had the benefit, folks, of being with Professor Baker when he starts teaching. And I get chills down my back. He doesn't know that, but it's just like, oh my God, this is amazing. And I'm sitting here taking notes. Yesterday afternoon, it absolutely blew me up. We started talking about going into my world of autoregressions and probabilities and everything. It was fascinating talk. So I thanks, Jim, for being a good friend and all that.
No problem.
And so do you have any closing comments on the Fed? And then I'll just focus in on these market patterns here and close out with everyone. After everyone putting up with echoes, I owe you. So here's my gift to everybody. When the market closes, if you want to go through some individual stocks, I'll spend some time and go through some individual stocks for a while. So queue those up, but don't give them to me until time, because they'll disappear on the timeline.
Well, I just want to say that this session has had a calming influence on me, and I'm sincere that I entered this session with anger and cursing with that anger. And I want to apologize to all your followers. And from now on, I will not do that. I may be a little duller, but I won't do that.
You'll never be dull. Come on. That's fine. So, so I think we covered everything pretty well on the Fed today. I'll probably close out some stuff. I'm sure we'll be talking very soon. And like I said, we'll get this thing set up with Phil. I'll talk to you, if not later today, early in the morning. We'll catch up and figure out how we're going to handle that, because that's something that the world needs to hear. And even if we have to do some promotions on that video, I really want to get something together that will do it justice to get, but especially you and Phil on in this conversation, and have it very organized, so it's not just a random Twitter space that a bunch of people are going in 50 different directions, where we actually focus on it. So I'll be reaching out to you very soon.
Sounds great. Well, look forward.
All right, Jim. Have a good day. I will talk to you probably later on. Okay. All right. Take care. Bye. Hey, folks. Once again, thank you. Like I said. Yeah, listen, Baker's good. He's pretty amazing man. I've gotten to know him really, really well. I've spent a fair amount of time with him off and on over the last 6-8 months, and it's been a blessing. And so let's focus in on the close. I think things are trying to stabilize a little bit here. We'll get into let's go over to the hourly chart. I've been wanting to get over here for a while. Hourlies are suggesting we're still got some downside. In the case of these algos, by the way, I'm going to try another screen. If it has an echo, I know how to fix it now. Okay, so let's just try this real quick. Okay, it should be fine, right? No echo, no nothing, correct? Yeah, so the hourly patterns that we're looking at here, folks, let me expand this just a bit. This is really, when you're looking at patterns, I have a mild form of dyslexia that I've dealt with my whole life. It plagued me when I was a kid, and it's been an asset to me since I've been an adult. And people that have some ADHD kind of tendency, that is, it can be really interesting. I see things backwards a lot of times than other people, and that's been a blessing for me. And when we see, but I recognize patterns. I'm almost one of those people that I see patterns in everything. So this pattern, this is pretty much what we're looking at right here as we come in, going all the way back to the 21st, going back a day. This is just a random data, and then we see the volatility spike around Powell's comments today, and this disrupts. This is that thing that I talked to you folks about in the what's the best way to put this, where you get these volatility spikes, and then they have to normalize before you can read them. Anything you do in these volatility ranges, a lot of times you can take the other side of the extremes. I was showing you that box formation, and if the box gets we're trading outside of the box now. We're back down to 13 again. So we've completely reversed this. I'm going to go back to the 1 minute. So since then, the algo's rolled over. We're coming back down, and we've gotten below that number I mentioned earlier, which was the 17 handle. We're trading right around that number right now. We're trading 14. If you notice these red dots stop calculating, that means the pivot stopped, so it's no longer valid. So now we're just kind of operating here. It looks like the PPM1 is trying to firm up here. We're probably going to come back into these averages. If I had to guess, and I will guess, we got 20 minutes to go. We're probably looking at coming back into this range. This is probably this 14 level is probably about where it goes. The algos are starting to firm up just a little bit here on PPM1, PPM2. We'll see what, since this is a 1 minute, we're going to get lots of updates every minute as it comes together. So, red dots are still on for SPY. Yeah, that's Craig, that's probably the case. So this is something interesting. I won't go too deep in this. We'll kind of keep it in context with the market. But if you're using the indicators, it's if you go to like SPY versus an ES or some other instrument, all of those patterns, they're slightly different, and the algos are going to pick them up relative to their patterns. And so like on our WaveTech product, on our Portfolio Expert product, we have roughly about 15,800 symbols that are in there, right? And every symbol is viewed as its own individual. There's nothing looking at trying to making composites of some group of symbol. Like if this sector's long, then we're buying baskets of stocks based on that. Every stock, everything in our universe is looked at as an individual symbol, and it's based on just you're bringing up the chart, and this is what it is. And so you could have 5 symbols in the same sector and not have a consensus there. And sometimes there is if the sector is going up a lot. But going back to looking at SPY versus ES, going to SPX, going to any derivative of those, they're going to have slightly different situations going on, and they probably should be similar. Now, just going back to the markets here, what we're seeing on the screen is there's still quite a bit of PPM1 is at a minus 0.31, and anything under minus 0.25 is a downtrend. So we definitely got a little rejection off of here. It does suggest at about 12:45, about 15 minutes to go, if the algo continues, we're going to get a breach of the second derivative, which means we should get above, be able to remain above the 10-period moving average. And we'll just watch the market grid here for a few minutes. And now, FF, just to clarify, yeah, so I made it does work on all those. It's just, okay, we just got some new upward projections here again on the 1 minute graph. Yeah, it works fine on SPX, and you just have to, what I'm saying here is that you might be able to proxy a ES against a SPY trade if you wanted to. That might work. Those are things you have to research. I specifically trade ES, nothing else. I tried trading SPY, don't like how it trades. I'm a derivatives guy, always have been. So I'm really not on that, but just looking at the algos here, we're getting upside targets again of 49, and PPMs all of a sudden, if you notice, the algos the last 2 minutes have adjusted a little bit, have gotten a little bit stronger. So now all of a sudden it looks like we're going to. There's still a lot of resistance at 20, 25, 27 at the 40, 2450. And a 26 handle, that's your resistance. Above 26, then you're probably looking at maybe trading up into this pattern. That 1, 2, 3 pattern that I was talking about earlier, folks, has actually kind of failed. And I'll draw this in while we're just talking markets here and doing this stuff. I'm really upset that we had that echo for all that time, and it's frustrating. Especially when I found out what happened. So let's just take a quick look at this, because so when I was talking earlier, I said we get this 1.2, this pivot was there at the time, and if we were able to hold that zone, then that gave us a pretty good projection for these numbers that are up there, right? But if we look at what's happened now what we've done is we've went a little deeper. So if we draw a line across here, be as flat as can, we've done more like a 70, maybe almost 80% retracement of that previous value. Typically, you're going to get 0.5, 0.618, stay within some reasonable Fibonacci. There's a number at 0.76. I never found that to be a good number. There's a Gann number at 0.66 I use often as a level to look at from if it takes out 0.66, usually that means that 1, 2, 3 pattern has been invalidated. Go find something else to do is kind of my attitude on that. But what I want to show you here is that now what happens at a pattern like this, you might only get back and you do a retracement of this first leg. So in the trading room, we talk a lot about this first leg is length of 1 and 2, or it could be A, B, or a 1, 2, and that the B leg or the 2 down should not really exceed a reasonable level of 0.618. It can do a double bottom and still be a good valid process, but this one went down too far, so it basically failed that pattern. And what we're seeing on the screen, let me get rid of everything here real quick. And what we're seeing real time here is that the calculation for that upward swing is stopped. We're now taking out the lows, and we're just waffling along the bottom of this range down at that 13, 14 level. So now we're down to 0.5, and we're just printing down into making some new lows in the pattern. So it's going to be interesting to see how we go out. After trading 76, by the way, I haven't brought up TradeStation here, but let's go over here and let's take a look at something real quick. And it's a context we should always have. But if we look here, let me get to daily. Yeah, so we got 73.75, and we're looking at that. By the way, was a perfect R2 hit. Let me put that on screen for you. Check it out. So we had a high of 40.73, R2 40.74.25, S1 40.17. How many times? That was the number I was talking about the whole time. That was S1. S2 would be 39. 39. I'll get this right. 39.97. Right. So we could print S2 R2 today, and that'd be pretty typical of everything that's going on. So we're most likely, we do have new Fibonacci targets on the downside now, which is 92, 80, 81, 74. This is off a 1 minute chart. So algos are stabilizing here. We probably end up going. We had an infamous character in our live room for quite a while. Maybe he's watching now, but always would scream at 10-minute manipulated. I always forget what he called it, but manipulated area. So we're coming in that final 10 minutes, and we always get these crazy volatility spikes. So yeah, so we'll see how this thing sets up. But yeah, so that also, just to confirm what I was just talking about, you notice that there were a double red arrow, which tells you that there was no offsetting downtick, which is also a negative sign. And then we got on the upside, we got the upward arrow and then another pivot. And that's where these levels down below are coming here, where my cursor is, these new fib targets to the downside. That's exactly where they're at. And so, yeah, so they're still valid. So maybe we print, here we are at 01 even, 25. So definitely some selling coming in. So whatever enthusiasm comes out, always when Powell stops talking and the market just starts to fade. It'll be interesting to see how we close up, see what kind of things that we're looking at. I mentioned in, I think, last night's video, I was talking about the algos on a daily. We can bring those up real quick here. And what we're seeing there is, it looks like to me is that we traded right into some of those targets last night. 40.57. You may remember me talking about that number last night. 40.57. We had, like I said, we had some patterns here that were suggesting we would peak out. We came back up to the 40. We're still locked into this range, folks. There's no, don't call me bullish Bob. When I talk about our database, it has everything to do with expectations looking forward. And as I've been stating, I don't see any all-time new highs. I don't see anything bullish. I don't see anything super negative. We've really been locked in a wide trading range for a while. And as much as people try to talk it down, it just continues to chop in this range, and uncertainty is being reflected in the price action. So we get to these extremes within some kind of box formation. So that anyway, yeah, where are we here? So we're right at that 1 minute, 10-minute manipulated phase. See what we get out of here. We're 97, so we just printed S2, folks. So rejection right off of R2, which is 74.25 with a high of 73 and change. What was that number? 73 and change. Up here, that was 73.75, and now here we are printing 95.50. So we're hitting right down to that fib target 1. So we're definitely saw everything turn south. This primary indicator here, which is this PPM2, is the point that we've seen this decline go all the way down. It's starting to suggest, at least from this level, it'll firm up. We'll see if we end up going. We've got 9 minutes to go in the session. So in just a few minutes, we'll do a session like I used to after those of you that have hung out and listened to the echo and all of that crud in the beginning of the stream, and then I'll pay back by doing some individual stocks and some things. Yeah, I appreciate folks in the community. I have no idea. I see. I know we have some of the Smurfs around, which are the moderators. So if you killed any of those guys, I had to get rid of Dolores. I did that just because of just want to. People like to hijack, like, oh, I told you this. Like there's some anyway. Good luck to you all. But the bottom line is we're printing 87 now, so we're coming down, and some pretty good selling coming in here to the close. I'm going to go over to a different screen totally, and let's just go over here to level 2, and here we are printing lows 86. They're punching them out, and let's just take a look at this stuff here. I think this will be interesting. Okay, kids, get along. 84.50, 84 even. So we're seeing this really sharp decline here, and so this is interesting because this chart in the middle is a 5-minute with the market grid, and also looking at the webs on here, and we're clearly in a downward rope right now. So we printed 84. I'm going to flop back and forth just for a minute. I'm going to go back here. Yeah, so the fib target 2 was 81 even, so we almost got to fib target 2 there. All right, we should, I'm just cautious. Let me know if there's an echo. I think I have everything set up pretty good now. I think I fixed all the difference. Okay, good. Thanks, Greg. Okay, so who's Caleb? Bob has no clue. No clue about what, Caleb? I didn't see your previous comment. I'm sure, hopefully, it was intelligent. Yeah, so we're still pressing them here. Here we are at 79, 78. So let's go back to this other screen real quick. Right at that 10-minute mark, I'm telling you, we just got all this heavy selling. Look at this, 75 printing. It's like panic selling. We're down 59 handles now. So hopefully Baker stayed short. Yeah, starting to get some pretty good volatility. One of the things I talk a lot about and watching, especially if you have level 2, is watching tick volume. And tick volume has picked up pretty substantially at the moment. We're probably trying to set up a low. There's another event. If we printed 75, and if you bounce about 5 to 6 handles off of you print a new low and it bounces immediately, 5 or 6 handles, typically that will be a low print for that period, and typically will set up some bigger pattern here, and we're kind of seeing that right now. We're at 81. The low print was 75. So we're at that 6-7 handle. So we're probably seeing the low of this. We'll start to get into closing configuration mode here. Like I said, when the market closes, we'll spend some time and do Yeah, GME ripped. I did see that. Dancing Monkey. Oh, I don't let them get to me, John. I just like to bring them out so I can confront them. Yeah, big time selling though, folks. Down 134 on the session. After printing once again, 40.50, 40.75. These numbers, we just keep getting rejected out of this thing. Here we are back in the 39 handle. Absolutely amazing, I think. Yeah, we'll just stay on the screen coming into close. We have about 2.5 minutes to go. We'll just stay right here. But yeah, pretty crazy selling. And think of this, we are 100 points basically off the high of the session. We printed 74, not quite, I'm exaggerating, but we're pretty close to it. So that was a pretty good move. And yeah, in fact, yeah, I do want to say something. If you go to Seeking Alpha, Jim has written a number of articles recently. I tell him when I grow up, I want to be just like him. He's at 82 years old, participating at the level and clarity that he does is absolutely amazing. So 75 print low. We traded up to about 82 handle there. Coming back in, sellers are showing up again as we come into the close. We're final minute actually. So this is literally going out at, the cash is trying to go out at the low of the day anyway. That's what this is pressing. Here we are trying to retest the lows here. Looks like see if they can print a new low. Big bid showed up, 420 to buy at 75, and they're working it. They're trying to work it right now. There they go. They're working it. They're going to take them out. Pretty holding so far. There goes. Look at that. 74 prints, new lows. There was 450 to buy there. They just took them out. 72 prints. Now we're down 158, 171, 70.50 prints, 69.50 prints. Absolutely vertical drop here on the close. Everybody's selling. There it is. That's the close right there, folks. Yeah, that was crazy little final little sell off there. Let's do this. What I would like to do, let me get set up here. Okay. Yeah, so let's take a couple look at something I haven't looked at since we talked about a little bit ago. Let's take a look at the I want to see the 2-year yields, 394 on the close. We did print down to 91. They got back up over the 4 handle for a minute there. Upward projections on the yields on the 2-year. So that's interesting, I guess. Pretty much in range bound in the last 20 minutes or so. Yeah, we traded all the way up here toward the 4%, back down to 393, 391 range, and we're trading right along this Fibonacci target range. So, okay. Yeah, that's funny. The closing bell is messed up because of my clock is set on Arizona, but my trade station's set on Mountain Time, so the bell didn't go off. I missed it too. I was waiting for it. Why didn't it go off? That was a good call. So, yeah, daylight savings time does ruin everything. I hate it. So let's do this. My screen got jacked around. It's been an interesting day, folks. Thanks for hanging out. So do this. Give me some symbols you'd like me to take a look at, and we'll do some analysis here of what's going on. It's kind of interesting. The 2-year bond looks to me like this thing's still trying to put a bottom here in yield, and we're going to see it move back up to 420 plus. I just don't see it happening any other way. There's another maybe day of downside here, but this is definitely a pattern that's likely to end up being a low in yields here on the 2-year. And let's just go to let's go here. And so we did get the downtick. This is interesting on the algo. I remember last night it was showing one downtick and then back up again. So we did get the downtick. We managed to print down 1.59, down 64 handles. And like I said, that was after printing all the way up to the stuff. So let's see what you guys are asking for. RTY, XOM, XLE. Yeah, I'm going to bring something else up on the other screen here, folks. So we'll spend a little time. Like I said, I owe you folks after tolerating the echo. All right. I'm just looking at a couple symbols here, trying to set this up just a little bit. All right. So let's do this. Let's start with some typical. Let's go to Tesla, and we'll do a bit of a dive on a couple of these. We came. I covered this in the live room a while back, and I was talking. One of the participants in the room had been long, and so we were probably going to see right around 203 or so. We got up just below the 200, moved down. The algos are suggesting that we're going to probably just stabilize in here. There's not a lot on the daily. Let's go to the weekly, though, just see if there's some patterns there to look at. So this goes back a ways. We had the targets at 208. That was the number I was talking about. We reached the 208. We printed just above there. Next fib target right now is this, looking at 208, 249, and 274. I was just, the thing is that is on here, this is weekly, is the weekly algos are not 100% supporting this pattern, but this is what I was talking to you about a little bit ago, that 1, 2, 3 pattern here, and I'll draw in some of this stuff, okay, so you can want to focus all of our eyes at the right place. And this is potentially a 1, 2, 3, and these patterns are part of it, but ultimately there's probably some new targets that come in up here. let me do a better job at drawing those in, but probably somewhere, up here in this swing where this swing is going to suggest it goes. And I won't get too technical, but this 1, 2, 3, there's a target range on that. I haven't talked about it for a while. My Substack account has been pretty frozen for a while, but I've got this. I threatened about 5 times in the last 5 weeks to get this article out, part 2 of the PPMs. But one of the things I talk about here is WaveTech and this 1, 2, 3 pattern, and actually how to predict a complete Elliott wave sequence when you only know 2 components. And I think you folks will find that, that interesting. And hopefully I can get that out here soon. And maybe I release it without some of the other stuff I want, just to get it out there, and then include the next stuff in part 3. I think I probably could have what I'm out talking about right now out several weeks ago. So this is the pattern that's here on Tesla. Probably is likely. So we'll see how this all plays out. That's what's set up on the weekly. The only thing that's happening is the weekly is suggesting we're going to see some downside on this PPM2. But just so if you have the indicators, I just want to bring this up, maybe a little education here. Even though this PPM is declining, if you look over to the right over the next week or two, it still has a strong upward bias. It's at 1.72. Anything over 0.25 is a trend. So this, what that tells you is the 10-period moving average 184 is pretty much right where we are now, 91.15. We should manage to bounce back above that. The low was 172 was the 21-week moving average. So we're probably going to get sandwiched between the extreme of the 21-week and up here at the 40 around the 216, just above that fib target. All right, let's just do the obvious, and I'll go to some of your other picks. Let's just do Apple on the same thing. Apple is printing up pretty good. Didn't really care much about the Fed today. Nice print on the upside. But the algos, this is weekly again. We're looking at the weeklies are starting to peak out here, and I'm just looking at these algos. I'm going to set them back. If you have those, folks, if you have the PPMs and you have the auto regressions turned on, if you're not seeing a calculation, you can set this back to 50 bars. And then you'll see it go. So you go into settings and then click here and you can hit OK. And then you'll see calculations. You'll see the forward looking, the dots that indicate what the expectation is. So we're seeing on Apple, even though it's peaking out here, or not peaking out, the algos are peaking out, that there's at least a week to 2 weeks more of this upward bias. And Apple's a little bit stronger. If you look up at Apple, we're looking at Fibonacci targets right now at, let me get those numbers up here for you. High target 167, 186, 197 up here. These are big numbers, and really probably what you're likely to do is to come back, and the Fib target 1 would be a retest of this high that we had back in August of last year. This is what I call a dragon head formation. They resolve themselves to the upside on about a 70% level, so we should see higher prints and look for probably we've already taken out this previous high, so we should get a swing. And this is that one. These patterns, these dots up here, are those projections that are out there. And if you look at previous projections, they're very accurate in how they get hit. And you get one like here where we got this big projection, but the next bar, it failed and takes it off the table. But you're looking at even the downside projections are very, very accurate in figuring out these patterns. And so, and the PPMs, if you use PPMs 1, 2, and 3, oftentimes will have the WaveTech 200, the very bottom one, which tracks this 200-day moving average. In this case, this 200-week. But this pattern that's set up here is pretty bullish, folks. It's still looking like there's more upside. There's good support down here at the 140 level. You can almost buy blindfolded against that if you see those values. That's a long ways from here, 140, 148 last print. But this is a weekly analysis on Apple. All right, so let me dig into, so those are the two biggies that usually come up, so I got those out of the way. Let's take a look at a couple other things here. Let's go, and I was down in Phoenix Valley the other day, and I keep looking at that new chip factory they're building. Pretty giant. But we'll go to AMD here. AMD is trading into its upward targets. These targets have been generated. We're looking at 84, 71, 94, 99. We printed 90, 101, 70. This is weekly again, so I'm just going to stick with weekly analysis. Weekly is suggesting we have some, it's not for about 3 weeks out into early April when we start to see things start to turn around a little bit here. But we're printing into these ranges, whether it can extend or not. If you own it, I just keep tight stops underneath it to protect your profits. Let's go to daily. So daily, daily's suggesting a few more days, probably coming into next week. We still have some positive bias as we come in there. Yeah, so I'm glad I looked at the comments here. Let's so we got a climactic move here on the NASDAQ. So this is interesting here. Let's see what the values are. 306.40, 305.95, close 306. Yeah, you gotta love that. So you got the reversal pattern, right? So let's set up the and this is daily. So we have a 3-day trade set up. So I guess we led there, and I can see FF, and you guys are already on this thing. Let's take a look at this thing. So the values, I want to look at a couple things here. The values here of where I just want to see where we got to. The high today was 315.25, 315.25, and we had actually RXT today was 312.66. So we've traded above that, got hammered, reversed down, and so let's set up. So if you're new hanging around here and you haven't seen this, what I call the 3-bar trade, it's 3 to 5, and there's a video which is on Apple. I'll see if we can get this thing hooked up today on the description in the channel, or a card or something on this video today. It's basically, it's a 3-day trade. You get an outside reversal to the downside. You have to take out yesterday's high, and yesterday's low and closed lower. We closed virtually at the low of the session, so we satisfied that. And right now we don't have the numbers, but I think, yeah, we don't have the numbers at the moment. But let me go over to TradeStation for a minute, because I think I can get them from here. So we go to the NQs. Yeah, so I'm just trying to see if they've calculated yet. 1 second here. They haven't. So once the futures close up, unfortunately they haven't closed. I'll have calculations on there. So I'll cover that on tonight's YouTube video. So, but let's go back to this chart over here and just talk about this reversal trade. Typically, when you get a reversal, there's a number of elements to set up. Is that it needs to be at a high of a sequence, which this is the case. We need to take out the previous day's high and low. We did. We need to close in the lower 60% of the daily range. That sets up the pattern. So now here's what's next. The next day, you have to close lower. So we need to close lower. On Thursday, we cannot make a new high. And typically, when we have the market grid, usually an R1, R2 max is where it will trade to. If you can get trades off to go short at that level, then you're going. If you happen to get short today and you already have it, you're in good shape, especially if you got a decent short off when it was rallying today. You hold that trade, and then what you need to see is a confirmation. So tomorrow, market can't make a new high, must make a new low, and must close lower. The next day, every day for the next 3 days, it has to make a new low, does not have to close lower. On the fourth day, you take profits on a new low, or every day you use the previous day's high as a stop. And I've been doing these trades for so long that some of that little simple trade setup will lead you to a monster trade sometimes. When they work really big. When they don't work, you're usually out the first day. So it has to close lower tomorrow. So let's say it opens higher, or you sell a rally tomorrow and it closes higher, you should be out at the close. You should not be in anymore. So it has to close lower. If you get the confirmation close, you can go from there. You can actually, I talked about this trade, I think around the first week of February of 2022. What we got there was an outside reversal bar on the S&P, made an all-time, this was an ATH pattern, all-time new high, and it got a reversal on the monthly. I said if it closes lower in February, you get at least 2 or 3 months, and that led to a quarterly reversal pattern that led us all the way into fourth quarter of last year. So there was really could have participated in a major decline last year by using this simple technique. So this is something that that's something I've traded for years. So it's real simple. Typically has a fairly low risk. The duration of the trade is since you have tight controls on this pattern, it's pretty good. So, all right, so let's do a couple more stocks. I'm just trying to get yeah, I guess we got to look at we'll look at Robinhood, some meme stocks here. This is a daily chart. Algos are flat. This thing's going nowhere. Let's flip over to weekly, see if there's any patterns there. What a mess. Expected so. Let me just yeah, I'm going to go back to the daily. That thing's just a crater job. Let me just reset this. Yeah, I don't see anything here. I know somebody mentioned GME. Big reversal all the way up to the 200-day and reversed off of there. Algos are saying all of these averages are going to come up and there's going to be support under there. I'm just trying to bring something up here on I'm just curious. I'm bringing up WaveTech real quick here. So GME weekly, no trade. I'm just curious to see if anything was picked up here. Nothing on 1-2. So unfortunately, this thing came out of nowhere. So no buy signals on GME ahead of this. So I've seen a lot of times where we've gotten a buy in a base. We did not get it in this case. All right, so let's look at a couple more symbols. I guess we can look at Meta. Let's go to weekly. Yeah, it's interesting. Meta was a pretty big turnaround case. We've had some interesting things come from there. I am bringing up something on another screen here real quick, so bear with me. Yeah, we should definitely do some banks as well. Hang on one second. I'm just bringing something up. I'll show you, excuse me. I'm going to bring up Portfolio Expert here. We had a trade over here in Meta. Let me just see where that trade came in at. And so we had a buy at 117.83 here. Looks like a pretty decent trade. We'll go back over to trading view. 199. So we bought at 173 in this base down here. That's the right price. Hang on a second. Let me expand this out. Yeah, 117. Yeah. Yeah, so we've been long down here since 117, so it's a pretty big trade. Still looks like it's continuing. The algos are still positive. Looks like days out, we're going to start to climb the slope. I wouldn't be surprised to see this hit the, this is weekly, hit this, move up towards this 200-week moving average at least up in here. Looks like everything has got weak, the strength in this pattern is really starting to roll up. We're seeing the PPM2 continue to be strong, and the crossover of the 21 and 40 will be another event that is telling us that we have more of an elongated trend that's setting up here. Let's do something interesting. Let's go really, really long term. Okay, I'm glad we did that. Couple things here. So on a long term on Meta, this low that came in here has set up a pretty decent pattern. There's a couple things on a monthly to look at. 268.55 is major resistance there, and then you have some Fibonacci targets up here at 335, which basically is a retracement. Probably if we did a fib retracement value, we'd probably see it was probably close to about 0.618. So that's in the cards. The pivot will be at 268, but I think we ultimately get up to around the 40-month moving average, 200-week moving average, which is roughly the 338 level. If I go back to the weekly, I'll tell you that value there is at the 236. So 236, 238 is your major pivot, but it looks like we're heading to that point there. All right, just one second. Reading a couple comments here, folks. Yeah, Dr. Werner is very interesting. I'd love to have the opportunity to talk to him. I think I have a contact to him, but I'm not 100% sure. It's something I've researched a little bit. So let's do this, folks. All right, no echo. I hope. Looks like we should have no echo. Thank you, everyone. Sorry for the echo and all the craziness. I was so frustrated by the time I got on air today. It was amazing because we literally had everything. All my settings on the channel, everything got disrupted on the Windows update. That was crazy, to say the least. So looking at VIX, we were talking about VIX was going down. It just reversed and went back all the way to 22.26. It was actually printing down at one stage. I'm just looking here down to 19. So interesting reversal in VIX. Everything is out there. I think that let me bring this up real quick here. So we should have sound. We do. I now know how to fix the echo, but I just want to bring this up here, just kind of look through what happened today. So we saw 10-year drop to 350. We saw some downside even on the short end. So there's some seriously flattening going on, or actually on the yield curve. We're looking at, just generally speaking, what's happening here. Bitcoin finally got clocked for 4%. That party's over. For the time being. Remember the support numbers I put out last night. But just looking here at some of the other numbers, gold caught a bid after being down. And it should have been coming right into some support levels that I talked about as well last night. Crude oil up. So kind of an interesting day, folks. I think that from the standpoint of what's going on overall in the world, really what we saw here was just a realignment for a day, and the exuberance ended at the 40-70 level, right at R2. It was perfect trade. Like I said, I wish I was not so. I was hoping to do some really good trading. There was some great trades there today. So unfortunately, with all the disruptions and noise and echoes and all that, I was unable to get there. Yeah. So yeah, I see you guys talking about money market funds. Did I'm laughing. Did you people not know that your funds weren't insured over if you have more than 250? I guess, yeah. So here's the deal. You've got SIPC. You probably should have a decent bank brokerage account, but I'm not here to throw gas on the fire. I don't have a high level of confidence that Charles Schwab. They are a bank. They are not a brokerage firm. And TD's about to be sucked in there in a minute. I think May 26th. They finally closed that deal that they did several years ago, where the name is going to get sucked down. All that's going to happen. But find a good brokerage firm. You got SIPC. You got some other stuff that you can have some protections. And you know, the whole world, as I've said, the world's always operated on trust and belief. And you know, the banking system, as I pointed out in my little very quick brief, because I could do probably an hour and a half on the history of banking and talk about each one of the crises that have happened and the panics, the boom bust period that we went through in the 1800s. That would have been absolutely crazy if you can imagine all that stuff happening without being able to go on Twitter and bring up Twitter and go, oh, look, you couldn't do that in 1820. So that had to be really interesting to be alive then and have these total disruptions and bank, the runs on the bank. Those are very real. Today, I just will say in closing of today's session is today we have a lot different mechanisms, the digital world, and God help us if we do get CBDC. But looking at the digital world, what the banks were able to do, central banks and other banks, were able to make deals with other players and shore up balance sheets, move assets, all that stuff. You're not going to figure out a lot of trying to figure out where the assets are going. That's not going to be an analysis that's going to be very worthy of anything. It's going to be very difficult. And like I said, most of the big money that's moving around is actually, people are watching it so close. I think everybody's all of a sudden an expert on the banking system. I thought that my comments earlier about being on Spaces and people that are talking about things, I don't claim to be an expert on it. I have a pretty good knowledge. That's why I bring Baker in. I mean, Baker, you know, bring in the father of asset liability management, and you've got somebody who understands a lot of stuff that I don't. I've learned a lot from Jim in the last 6 months, and I have some pretty good understanding, excuse me, of the discount window and all those things. But having grown up in the early 80s and the market started in 79, you pretty much had to understand a lot of this stuff. And even then, folks, I remember we had Reuters, and Reuters was on a dot matrix printer, like this little wheel of paper, and it would spin out, and guys would take a paper off every hour. We had a big scissors there, we cut it off, we fold it up, and then we had these big clothespins that were numbered based on the hour of the day. So you could go back and grab that piece of paper and scroll through the scroll of paper to see if there was any news on anything you wanted to. So guys would be standing there going through paper, reading all these little pieces of paper. So the world that we live in today, my point is that things can move much faster. You can plug holes, you can move money digitally and literally in seconds. And a lot of these issues are going to be different. As I mentioned in that my walk through history last night, some of those events were tsunamis. They're a big one. That 1873 was monster. That investment bank, what was it? Cook Investment Trust. I forget the exact name right now. When that thing blew up, that took everything down for decades. That didn't recover for a while. And it was, once again, you have to think about this. I'm going to rattle on for a minute, little mini rant that's coming up, is that we're coming into a new era right now, and we're seeing it everywhere. I believe my problems today were generated that Microsoft is really in a war against Google on the AI. That's why they put $10 billion in the open AI, and that's the war zone right now. AI is exploding. I can tell you I've used it extensively over the last 5 months. Usually an early adapter on stuff. Might be old, but I stay on top of this technology, and I think that that new era, and I was talking to somebody about this yesterday, is that what it's going to do is AI is going to give the ability, the main denominator in figuring out how economies and everything's going to look is productivity. And that if you can increase productivity, it changes everything. Income, GDP, everything. Productivity is the key to life as I understood it. Excuse me, back in a Econ 101 class, right? That's what counts. So let's say, and this was my scenario yesterday, that 20 or 30% of the people adapt AI, they're able to take their productivity and multiply it by some multiplier, maybe 3 times, 4 times, and all of a sudden the net on the overall productivity of the economy goes through the roof. Maybe it's multiplied by normal productivity is multiplied 2, 3 plus times. All of a sudden you have exponential growth and value in everything. And all this worrying about what the deposits are at this bank versus going and flowing to there, that's just noise. That's a distraction. And so when you start to look, if you look forward just a little bit, it's hard to see a negative view, I think. I've always been an optimist for most of my life, but I've been around a number of technology changes now going through the last 40 years. You think about what we've been through. I think we're about to go into a new era that is going to be sometimes scary. And I heard that I think one of the founders of OpenAI made a comment, it won't be OpenAI and ChatGPT that is going to take over. It's the people that use it are going to be able to take over. And that's what I'm talking about here. So I believe that this AI thing is really, really big. And I don't think any of us can get a handle on how big it is. But the one thing that I focused in on is that this multiplier of productivity could be absolutely huge. And I'll kind of leave it there in closing, but maybe there'll be more on this on tonight's video. I'll see you guys in a few hours. I appreciate hanging out. And sorry again for all the echoes. At least I got it all figured out. It's going to be interesting, folks. But what we're seeing right now on our screens is it's pretty irrelevant. Except for I know we manage money. We deal with a lot of money out in the world. And what's interesting is it's interesting. I'm looking here, 39.36 on the S&P cash, 39.75, right back to 39.50. We printed 40.50 plus up to 40.70, right back to 39.50. The trading range lives. Maybe it's now 38.50, 40.50. Maybe it's expanded. But volatility is ongoing. As you folks should know, our database is pretty lean on the short term. We're like 15% bullish. That's not very much bullish. That means 85 out of 100 stocks we don't have positions in. And on the intermediate, we have longer term positions that are still hanging in there, roughly 1 out of 2 symbols in our database are long, roughly 53%. So anyway, with that note, I'll sign off. Thank you again for participating and being willing to listen to the echo to hear what I had to say. And I'm glad I figured it out. I'm going to fix it all here when we get done. So I appreciate it. Have a great day, the rest of your day. See you at 9 o'clock Eastern time tonight. Thanks for watching. Hit the like button before you leave. Subscribe, all that good stuff. Hit the bell. Yeah, I fixed the audio on that one. No more echo. Have a great day, everyone. Yeah, for the record, I missed the trading room too. There may be a return of some sort. Hang in there.